Right now, shares of STRV Inc. are trading at $1.10. That's up a staggering 27.29% or 24 cents on the day. Now, looking at that price and that percentage jump, the immediate assumption for many traders, especially those using a platform like the Robinhood app or SoFi Invest, is that this is a classic speculative microcap pump. But the volume patterns we're seeing today suggest something entirely different. This isn't just noise. This appears to be targeted, informed accumulation. The general consensus on a stock like STRV Inc., when it's even noticed at all, is that it's a gamble. It's the kind of stock you might buy a few fractional shares of on Robinhood just to see what happens, a lottery ticket. It's not Nvidia stock, it's not Apple stock, it's not something you'd typically find in a structured Schwab Intelligent Portfolios build or a Fidelity mutual fund. The expectation is that this is just retail forum chatter driving the price. But here's the reality check. That expectation is flawed. When we look at the Level 2 data, the bid-ask spread is tightening, and the block sizes, while not enormous, are consistent. This suggests a few small, specialized funds are taking a position. This 27% move isn't the end of the story. It looks more like the beginning of the market waking up to a fundamental shift that hasn't hit the headlines yet. Let's break down the intraday action. The stock gapped up slightly at the open, which is typical. But instead of the usual morning spike followed by a sell-off, which many active traders on platforms like Interactive Brokers would anticipate and try to short, STRV has been building a staircase. It's finding support at key moving averages on the 5-minute chart. This is not the behavior of a disorganized retail swarm. This is methodical. The volume is the real story. We are already at 500% of the 30-day average volume, and it's not even lunchtime. For self-investing enthusiasts who rely on technical analysis, this is a massive signal. This volume spike is what separates a real move from a fake-out. People engaging in online investing often get burned by low-float stocks, but the sustained buying pressure here is what's turning heads. So, what's the catalyst? It's not an earnings report. It's not a press release. This is where you have to do the real work, looking beyond the Fidelity mobile app summary. We believe this is tied to a patent validation that was quietly posted late last night. STRV Inc. specializes in predictive logistics software for last-mile delivery. Their new patent covers a method for optimizing delivery routes using a novel AI framework. We have chatter that a major logistics carrier has begun a small-scale pilot program. This isn't the kind of news that gets blasted on major investing sites. This is quiet, fundamental progress. The expectation is that a 110 stock is junk. The reality is that it might hold a piece of intellectual property that a much larger company needs. This is the kind of asymmetrical bet that, while high risk, is exactly what serious speculators look for. It's not a safe investment, and you won't find it in your typical Fidelity wealth management portfolio, but it's compelling. Think about the current investment landscape. Everyone is crowded into the same handful of names. Go on any Robinhood stock trading forum, and it's all Tesla stock this and Nvidia stock that. The big Fidelity brokerage accounts are loaded with Fidelity ETFs and Fidelity mutual funds that hold the Magnificent Seven. That's fine, but where does new growth come from? This is where online investment platforms have changed the game. 20 years ago, you couldn't easily buy a stock like STRV. You'd have to call your broker, pay a huge commission. Now, with SoFi or Robinhood, access is instant. But this access comes with a trap. People confuse access with analysis. They see STRV Inc. up 27% and jump in, using Robinhood Investments or SoFi investing tools without understanding why it's market's moving. A more sophisticated investor might be using the Interactive Brokers trading platform. They're looking at the options chain, which is admittedly thin for STRV, but they're also looking at international market correlations. They're using Interactive Brokers for its advanced order types to build a position without spiking the price themselves. This is a very different kind of stock trading than just hitting buy on the Robinhood app. What about Fidelity? While Fidelity Investments is known for its robust Fidelity IRAs and long-term planning, its Fidelity trading platform, Active Trader Pro, is more than capable of handling this. An investor using Fidelity might be looking at this as a small, speculative part of their individual brokerage account, a what-if position funded by gains from Apple stock. Then you have the automated side. Services like Schwab Intelligent Portfolios or a SoFi robo-advisor will absolutely not be touching STRV Inc. today. These intelligent portfolio systems are designed for diversification and risk management. They are built to avoid this exact kind of single-stock volatility. This is a pure self-investing play. This is for the person who does their own research, wants investment help in the form of raw data, not packaged advice, and is willing to take on significant risk for a significant potential reward. This is what SoFi active investing platforms are built for, even if most users stick to SoFi stocks or SoFi ETFs. So, who exactly is STRV Inc.? This is where the story gets murky, which explains the 110 price tag. For the past 3 years, STRV has been operating in relative obscurity. Their quarterly reports? They're not pretty. They've been burning cash, as is typical for a pre-revenue R&D firm. Their business model is entirely dependent on proving their concept and either licensing their technology or being acquired outright. If you look at their performance over the last 12 months, it's been a painful slide from a high of around 350. This downtrend is what built the expectation of failure. The market basically wrote this company off, pricing it for bankruptcy. This is why you see such heavy selling pressure every time it ticks up. Long-term holders who are desperate to get out even. But the reality of a development stage company is that its past performance is almost irrelevant if its technology is validated. The market doesn't care about the last 2 years of losses if their new patent truly does cut last-mile delivery costs by 15%, as the patent abstract suggests. Suddenly, their cash burn isn't a liability. It's the cost of building a billion-dollar asset. The entire narrative flips on a dime, or in this case, on a 24-cent move. This is the disconnect. Most investing sites are using algorithms that screen for past revenue and profitability. STRV fails all those tests. It's only when you do the qualitative work, reading the filings, understanding the tech, that you see the potential. This is a high-stakes bet on their R&D. This brings up a serious question about execution. The technology sounds promising, but this management team is largely untested. Comment below with your thoughts. Do you trust a small R&D team to monetize a complex patent? Or is this a prime acquisition target for a giant like Amazon or Google? Let me know what you think. Let's map out the possibilities from here. Scenario 1, the bullish case. This 27% move is just the start. The market begins to understand the patent. We get a formal announcement of the pilot program. Analysts, the few that cover it, are forced to upgrade. In this case, 110 is the floor. We could see a move back to its previous 350 highs relatively quickly as shorts are forced to cover. This is what the bulls are playing for. They're using their Interactive Brokers account to buy call options, if any are available, or just stacking shares in their Fidelity brokerage account. Scenario 2, the bear case. This is a classic buy the rumor, sell the news event. The pilot program is real, but it fails. The technology doesn't scale. Or a larger company announces their own, better solution. In that case, this 27% gain will evaporate in a single session. Everyone who chased the stock on Robinhood today will be left holding the bag. The stock drifts back below $1 and resumes its path toward delisting. This is the risk. The expectation of quick riches meets the reality of failed R&D. Scenario 3, the most likely. Volatility. The stock will likely be whipsawed for weeks. Big players will try to shake out the weak hands. The price might run to $1.50, then crash back to $1 all in one day. This is a trader's environment, not a long-term investor's. This is where Interactive Brokers trading tools become critical for managing stop losses and entry points, especially for traders who are sensitive to Interactive Brokers' fees on a per-share basis and need to execute complex orders. This isn't something you buy on the SoFi trading platform and forget about in your SoFi Invest portfolio. It requires active management. The main risk here is financing. STRV is burning cash. This price spike is a gift to their CFO. You can almost guarantee they are preparing a secondary offering to raise capital at this new higher price. That dilution would put a temporary ceiling on the stock, even if the long-term story is good. This is the hard reality that many new to online investing don't understand. A rising price often means the company is about to sell more shares, which can hurt the individual brokerage account holders. And to be clear, this is pure old-school software speculation. People looking for Robinhood crypto or Robinhood cash management features are in the wrong place.